You're starting to hit some pretty, I saw, last week also talked about some drills about some pretty high grade, not just gold, also the nickel numbers were exceptional. Right. Which is the irony of having just offloaded Dumont was not lost on me, but at least it's in the same country. So high grade nickel, were you expecting to see those sorts of numbers?
Yeah, so historically, it's really interesting looking at Beta Hunt. I mean, Beta Hunt actually used to be two separate mines. There was the Beta mine and there was the Hunt mine. Both those mines were nickel operations that were actually in place for over 40 years. So one of the massive advantages that we have at Beta Hunt is there's over 400 kilometers of infrastructure in place already. And the announcements that you saw last week are actually a perfect example of us leveraging that infrastructure. If you look at the cross section in our second release there on the Larkin Zone, we actually drilled off the Larkin Zone from a drift that's been in place for over 30 years. So not only do we have excellent drill bays for exploration, but we also have these drifts in place for basically immediate mining or mining whenever we choose to do so. So it's been absolutely outstanding to have that infrastructure in place and now being able to take advantage of it. With respect to the nickel was obviously mined for an extensive period of time. And our exploration and geological theory was always that the nickel basically sat right on top of the gold where we're currently mining. That's been true in A Zone and Western Flanks where we're mining to the north of that Alpha Island Fault. We knew, or we at least had the theory, that those shear zones that we're mining, very continuous economic free cash flow generating shear zone, irrespective of coarse gold, those shear zones would continue south of the Alpha Island Fault, and that sitting on top of those shear zones would be this nickel, what we call a nickel trough. Now that nickel trough called the 30C, which we announced last week on top of that Larkin Gold Zone, is the first nickel discovery at Beta Hunt in over 13 years. So we're extremely excited about it. Those will provide some pretty fantastic byproduct credits. I mean, some of those intercepts were over 7% nickel. That's $1,000 a ton rock. They will be meaningful going forward, and we want to bake that into part of our stable mine and production plan to further improve our costs that we're already working on.
Okay, fantastic. You hit upon something there which I want to talk to you about, because people got very excited about Father's Day vein, and there's, again, part of the fervor around the retail investors was they wanted you to go hunting for these pockets of nuggety gold, right? You've said to the market, I think you've been quite clear about it, but I want you to articulate it to me now, which is you've got a plan and a process, and it's not about hunting the nuggets. You're going to methodically go through a process because this is economic at the grades that you're finding without the nuggets. So can you just explain the thinking behind that? Why not go chasing the easy, quick wins?
Yeah, absolutely. If they were easy, I guess we'd all be doing it for sure. But the big difference here is with the acquisition of that mill last year, and this is gold price rally agnostic here. Let's go back to $1,250 to $1,300 US per ounce gold. The acquisition of that mill in Higginsville took our milling costs, which were previously toll milling costs, from $45 Australian per ton down to $29 Australian per ton. And obviously in our last quarter, we had a significant improvement on that as well. So that has drastically changed the economics and the future of Beta Hunt. Beta Hunt is economic and free cash flow generative at the average grade. And what we are doing now is we are long hole stoping those entire shear zones, which grade somewhere in the range of 2.8 grams per ton. And we're taking them out in the proper geotechnical sequence in which they should be mined and making money even if we never hit another ounce of coarse gold. Now, do we think there is more coarse gold? Absolutely. Do we know where it occurs? We know the setting it occurs in, and we know that across those shear zones, there is 16 kilometers of where this pyritic sediment crosses those shear zone, which is the environment in which that gold drops out. But it's not a matter of if we'll get the coarse gold, it's a matter of when we'll get the coarse gold. And we're taking things out in a proper mine plan. We extract the entire shear, which includes the coarse gold. And at the front end of our mill, we have a gravity circuit in which we get 100% recovery of that coarse gold. So this is a stable operation, which is going to be economic without coarse gold, but all of the coarse gold that we encounter is, for lack of a better term, gravy on top. and will go directly to our bottom line. So it's a stable producing operation. It's something in which institutional investors are very, very interested in. Obviously, we have that very exciting coarse grade cold kicker, but we're not going to go tunneling just searching for these nuggets.